Kenya Central Bank retained its benchmark lending rate at 10% in light of a sharp increase in inflation in February to over 9%, as well as continued depressed private sector credit growth and continuing uncertainties about the global economy. When speaking to the press earlier today, the central bank governor, Patrick Njoroge, said that the rise in inflation was driven mainly by a rise in food inflation, which was at 16.5%. Now, he expects food prices to ease before the end of this year as long rains come in. Dr. Njoroge also did say that private sector credit had stabilized roughly at about 4%, even as banks moved away from issuing personal loans. He revealed that the share of loans to corporates have increased relative to business and personal loans. CBK data shows that developments in the trade, manufacturing, real estate and private households, which account for roughly 60% of total credit to the private sector, did decline. The governor also added that a further evaluation of the rate capping law is required. Now, that rate cap law came into effect in September last year. It's seen banks in the country witness much tighter returns.
If the damage is so great, I think there's only the answer to dealing with it is very clear. I think there are those of us that maybe need to appreciate more, meaning to be convinced. You understand what I'm saying? Because after all, we are in a pluralistic society. But I think this is what we are getting at. I do not want to say anything beyond that, but I think it is clear that this is something that all of us need to take pause and sort of say, hey, we probably wanted to do X, we need to do Y.